Ladies and gentlemen, good day and welcome to Globe Civil Projects Limited Q3 and 9 months FY26 results conference call, hosted by Equibridge X Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gautam Nagar from Equibridge X Advisors. Thank you, and over to you.
Thank you. A very good evening to everyone. Welcome to the Q3 and 9M FY26 earnings call of Global Civil Projects India Limited. From the management team, we have with us today Mr. Vipul Khurana, Managing Director, and Mr. Raghav Agarwal, Chief Financial Officer. We will have opening remarks from the management team, post which we will open the floor for Q&A. With that, I would like to hand over the call to management for the opening remarks.
Hi, good evening. This is Vipul Khurana, Managing Director, Globe Civil Projects Limited. Thank you for joining us today for the earnings call of Globe Civil Projects Limited. We truly appreciate the time and interest of our investor, analysts, and all the stakeholders. The period reflects the company's continued focus on disciplined execution, stable operation, and a measured approach to growth across the EPC project portfolio. Globe Civil Projects Limited is an EPC-focused infrastructure company engaged in the execution of civil and infrastructure projects across India. The company undertakes a wide range of projects, including construction of infrastructure facilities, buildings, and allied civil works, with a strong emphasis on quality, execution, cost efficiency, and timely delivery. Over the years, the company has built established project execution capabilities supported by experienced management, prudent project selection, and disciplined cost management, enabling consistent performance across cycles. During the third quarter of financial year 2026, the company delivered a stable financial performance, supported by a steady progress across ongoing projects and effective cost control. Now I hand over to Raghav Agarwal, CFO, to continue with the financials.
Hello everyone, I am Raghav Agarwal, Chief Financial Officer of the company. Coming to the financials of the company for Q3 and 9 months ending December 2025. On a standalone basis, the total income for the quarter stood at 937.57 million, while profit before tax was 79.96 million. Net profit for the quarter was 65.28 million, translating into a net profit margin of approximately 6.96% with earnings per share of rupees 1.10. For the 9 months ended financial year 26, standalone total income stood at 2,481.37 million. Profit before tax was 233.45 million, and a net profit reached 175.67 million, with a EPS of rupees 3.23. Coming on to the consolidated basis, the company reported total income of 1,020.91 million, and for quarter 3 financial year 26, and 2,645.75 million for 9 months period. While maintaining stable profitability levels, these results reflect the company's disciplined execution approach, focus on cost efficiency, and steady progress across its EPC order book. The infrastructure sector in India continues to benefit from government-led capital expenditure, increased focus on roads, urban infrastructure, and public works, providing a supportive demand environment for EPC companies. Within this environment, Globe Civil Projects Limited remains focused on strengthening execution capabilities, improving working capital efficiency, and selectively pursuing opportunities aligned with its risk framework. Thank you for joining us today and for your interest in Globe Civil Projects Limited. We will now open the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Aniket Madhwani from Step Trade Capital. Please go ahead.
Yeah, hi, sir. I'm audible.
Can you use your handset mode, please? Your audio is not very clear.
Hello, I'm audible now?
Yeah.
Yes, please go ahead.
Yeah, so my first question was, what's your current outstanding order book as of 31st Jan? If you can.
Current balance order book is around 850 crores.
Yeah.
And we have
850
bid around 850 crores. Four projects we have already bidded of roughly around 500 crores, and in the next 2-3 months we have pipeline of another bidding of 500 crores.
And what strike rate should we expect from the bidding? Of
Strike rate,
housing?
see, in our business, strike rate is not necessarily depends on the project to project. Sometimes we bid 3 projects and we get all 3, and sometimes we bid 5 projects we don't get. Our focus is on getting the projects, good projects in good prices rather than maintaining a strike rate. So, but yeah, we are selective in bidding. We don't bid each and every project. We only bid the project where our chances are very high of getting it. But we are not that desperate, and we don't underquote and get the project. So yeah, to maintain the healthy order book and healthy bottom line and top line, we bid selective projects with good margins.
So I just want to understand, despite having this large order book, you are still facing challenges to execute this order. So what's your execution timeline generally? If you receive the order on 1st Jan, so what's the execution timeline?
The execution timeline depends on project to project. The normal execution timeline is from 18 months to 30 months. But with lot of projects in Delhi, NCR, and in a project of say 18 months, 6 to 8 months are gone because of pollution. The work stops in Delhi, NCR. So again, that 18 months spillover is there for at least 26 months or 28 months. So this is a drawback in Delhi, but otherwise other projects are going on time, and we haven't, in single project, we haven't got any penalty or any compensation from the client. So it's going all within the timeline with this.
So as per your previous guidance, you will be closing around 200 CR in this quarter, right?
Come again, please.
I'm saying, as per your previous guidance, you will be closing around 200 CR in this quarter. So that will take you to the annual revenue guidance of 20 to 25% growth, as you mentioned previously.
Yeah, previously we had mentioned we had mentioned about 20 to 25% of growth. It may come down a bit. We are not sure. Depends on this quarter. But yeah, maybe.
Last year our standalone revenue was around 325 crores, and we were like to maintain 20 to 25% growth every year on year. But this year, due to some pollution issues and major projects in Delhi, we are still expecting a 15% growth.
15%?
Yeah, 15 to 20%. We are trying that we will be able to maintain as compared to last year quarter 3 numbers. If you see, last year's standalone was around 225 crores, and this year it is 246 crores till quarter 3. Till December, I'm saying comparatively from 9 months to 9 months, there is a growth of 5 to 10% as of now. But fourth quarter is always better in our industry. So we are still hoping that now there is no such pollution thing in Delhi, and all our projects are now running. Only there is some delay in Haryana Cricket Association work only. That we are expecting that this month we will get all the approvals done from there. If that project would have started 3 months back, so we have easily achieved 20 to 25% also. So it is still on the track. There is no such delay.
And could you just give me the number of projects and the value for the same for which it got delayed in Delhi due to pollution?
No, all our major projects are in NCR. See, the one in KG Marg of 200 crores is in Delhi. Two Unitech projects of around 200 crores again to combine are in Delhi. And then Haryana Cricket Station, which we have yet to start, but again that's in NCR. And two schools we are doing, Delhi Public School in Noida and Faizabad, they are also in Delhi. And NIT Narela is also in Delhi. So major all our projects except Bangalore, one project we are doing it, which and one Bathinda.
Bathinda we have received this year only, and we have already achieved around 30 to 35 crores.
35 crores.
We have already built in this.
Out of 180 crores.
We have received this order in July, August only, and we have already done 35 crores in this project.
I just want to understand how pollution actually affected your business.
The pollution in pollution they ban the construction. Construction is stopped by government orders.
Construction is stopped due
Yeah,
to government order.
Yeah.
Okay.
As soon as grab 3, right now in Delhi, grab 2, as soon as this grab 3, when the pollution level goes to 300, they stop the construction, and when then this get grab 4, then it's completely banned.
Okay, and what's the current status in Delhi?
Current is grab 2 is going on. It's good now.
Grab 2. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Next question is from the line of Vijender Singh from Fluent Equity. Please go ahead.
Hi, am I audible?
Yes.
Yeah, I just want to confirm the order book as of December, the unexecuted one.
Yeah, around 850 crores.
850.
Yeah.
Great. So as you mentioned that, there has been some delay in the NCR project, which has caused the overall growth that, you have changed projections. So I just want to know what kind of projections you have for FY27 growth.
What kind of projection you have for?
FY27. So, I think
was similar projection which we have already given around the guidance factor of 20 to 25% growth is what we are looking at, is healthy to achieve. We might have missed this, but yeah, from this year to next year also we are targeting 20 to 25% growth. We have already built a number of projects and we will achieve those projections.
Then what is the pipeline for the projects that you bid for?
Pipeline, we have already bid around 500 crores. Project is under bidding, so we hope to open in 1 month or 2. There is 4 projects of totaling of 500 crores, and within 2 months we are in the process of bidding another 500 crore project.
So, but you guys have not achieved any major projects in the past 4 months. So, do you feel there's been a slowdown as such?
No. Last year we had totally procured around 500 crores of projects. Last year. In quarter 2 we have got, so yeah.
We have got 500 crore projects already.
So, and similar target we have more than that to get in this year also.
Okay.
So not necessarily every quarter we get, but yeah, the target of the year is achieved.
So overall, as you mentioned that, there has been a slowdown in the NCR projects. Has this also been the case for all of your peers that are in NCR?
Yeah. If you know, this year particularly, we had maximum projects in Delhi and NCR. Otherwise, last year or last to last year, we might have 50% outside, 70% outside in Delhi. So for our preference is to get in NCR so that it's better control, better cost control, and better profitability in NCR project rather than going out. But yeah, we don't going out is not a concern. If we get good prices, good rates, we go out also. But this year particularly, we have 78% of the order book of in Delhi NCR. Right now, we have bid one for Raipur, one for Visakhapatnam, two of Delhi again we have bid. So
Okay, thank you.
Thank you. Before we take the next question, would like to remind participants to ask a question, please press star and one on your phone. Next question is from the line of Siddharth Shukla, an individual investor. Please go ahead.
Yeah, good evening, everyone. So I have few questions to ask. So how do you see government infrastructure spending opportunity for Blue Civil?
I'm sorry, you're sounding muffled, Siddharth. His line is disconnected. We'll move on to the next question from the line of Neelam Kannani, an individual investor. Please go ahead.
Hello.
Neelam, please use your handset mode.
Yeah. Good evening, ma'am.
Please use your handset. Your voice is echoing, Neelam.
Ma'am, now it's okay?
No, are you on any Bluetooth device?
Hello?
Just use your handset mode, please. There's a lot of echo on your line.
Hello? Yeah, ma'am.
Yes, it is fine now. Please go ahead.
Good evening, everyone. My first question, how is the IPO process utilization progress so far versus state objectives?
Come again?
So how is the IPO process utilization progress so far versus stated objectives?
Yeah. The proceeds from the IPO as per the object, we have also uploaded a monitoring agency report on the portal also. So we, out of 119 crores, around 15 crores is the balance we have in our FDRs, and major object was 75 crores for the working capital, which is almost utilized. There is a balance of around 20 to 25 days. We have you can check the status of the proceeds of the IPO from the monitoring report also. So, and capex is remaining. We have a object of around 14 crores for capex, out of which around 10 crores is still available for capital expenditure, and some general corporate purpose of around 3 crores is available with us till December 2025.
Okay, sir. Thank you, sir. So my next question is, what proportion of funds is earmarked for working capital, capex, and debt reduction?
So, as per the IPO proceeds object, there was nothing for the debt reduction, and around 75 crore out of 119 crore was for working capital, and 14 crore out of 119 crore was for capex.
Okay, sir. Thank you, sir. And how should investors evaluate return on capital from IPO funded expansion over the next 2 to 3 years?
So, we have now we are doing majorly EPC projects, and the working capital is more required in EPC projects, and we have started. We are expecting around 20 to 25% growth every year, and our eligibility is also increasing with completion of every bigger project. Earlier, we were doing projects in joint ventures also. Now we have ample net worth. With the IPO proceeds, our net worth has increased. We are now eligible for more bigger projects and to grow faster. So this is what investors and can expect, that we can grow 20 to 25%. And government focus is also on the infrastructure projects. Every day there are number of projects that we can bid. It is about to choose which project is good. And this year we have already received around 500 crore projects in our order book, and another 300, 400 crore projects we are expecting this year. So for us, like now we can bid for 200, 300 crore single project also. So it is like to get 1 or 2 or 3 good projects in a complete year, rather getting much better strike rate or something. So it is like getting 2, 3 bigger projects, and that's all we need. So it is like choose good projects only.
And so what is the management medium-term growth guidance in terms of revenue and profitability?
Come again?
What is the management medium-term growth guidance in terms of revenue and profitability?
Medium growth for revenue and profitabilities.
We are expecting we can easily achieve 20% growth every year on a year.
So 20%?
20% growth every year in the revenue, and similarly in the profitability also. We choose projects which are having good margins also. So there are some circumstances like delay in projects due to pollution in Delhi. So that might increase some overheads cost also.
Okay. And sir, do you have any plans to diversify into new infrastructure subsegments or a higher margin project?
We are in a constant lookout for some good margin project or better margin project. But right now we don't have plan, because we are already doing railway station, we are already doing airport, we are already doing other buildings. So we are doing already complex nature of project. But yeah, we are constant lookout for some maybe seaport project or something like that. We try to study and we try to bid also. But nothing in particular that we are going through right now. But again, we are in a lookout and we are in the process of searching.
Okay, sir. Okay, thank you, sir, and all the best.
Thank you. Next question is from the line of Rohan Kamath from LNPR Capital. Please go ahead. Rohan?
Yeah, hi. Am I audible?
Yes.
Yes, please go ahead.
Yeah, thank you for giving me a chance. My first question is, Q3 FY26 shows a healthy execution momentum. Could you management outline the key drivers behind this quarter performance versus H1 FY26?
The key drivers were the similar projects we got and which we are in good position to run. So all our projects are running except one where the approval is pending. We could not start. Otherwise, all projects are running smoothly. So that was the key driver for the order book and turnover.
Generally, we choose projects where funds are available. The projects are deposit works. So delay, there might be reasons for delay like approvals and non-availability of funds. So generally, we choose projects where funds is never an issue, but approval is something which is required in every project. So we choose projects which have all funds availability, and we are expecting that approvals will also come as early as possible. So that the turnover is more or less similar to the Q2 in Q3 also. But one of the project, if that would have started, so it would have been a more better position for us also.
Okay, how has project execution progressed across roads, irrigation and building sectors during the quarter? Can you define this?
Could you please ask again?
How has project execution progressed across roads, irrigation, and building segments during this quarter?
No, we are not into irrigation. We don't have any project into irrigation. The building sector, we are only focusing on building sector right now. We do some flyovers we have done in past, but like mostly buildings is what we do. And the growth is good, and the availability of funds is also there. The project pipeline is also good in building sector. Every month we are quoting around 2 to 3, 4 projects, so the sector is good and driving right now.
What is the current order book as of December 2025, and how much revenue visibility does it provide for FY27 to 28?
We have around 850 crores of order book as on December, and visibility was similar, 20 to 25% growth year-on-year basis is what we are targeting. So,
Break down the order book by segment and geographically and highlight shift in the mix.
mostly North India is a sector, and geographically is mostly North India, which we are doing it right now. That's 90% of our order book. And institutions and institutional and colleges, and these are the key portions which we do. An exact breakup I don't have right now, but yeah, 70% in Delhi and NCR. Hospitals. Yeah.
What is the targeted order inflow for FY26 and FY27, and which segment are expected to contribute most?
In 26-27, our institutional building will be contributing to most of our order book. The transport and the railway section is going to reduce because we don't plan to innovate more railway station, and the old ones are about to finish. So, yeah, institutional sector is going, and housing sector is going to contribute maximum.
We have bigger project, Central University project, and cricket stadium is there. So these will be contributing more next year.
EBITDA margins have remained stable, including in Q3. What were the key costs they were supporting margin?
Yeah, EBITDA margin is quite stable, and there was some overhead cost that has incurred in Q3 because of one of the project that has not started as we were expecting. So more or less, EBITDA margins are similar. In Q2, EBITDA margin was around 15.92%, and now it is 15.89%. So EBITDA is almost similar.
Okay, my last question. Is this company targeting any specific debt to equity or net debt to EBITDA range over the medium term?
Come again?
Debt to equity. Is the company targeting any specific debt to equity or debt to EBITDA range over the medium term?
We have ample funds as of now. We are not targeting any new borrowings, except the borrowings for non-fund based limits like bank guarantee. That is one of the major borrowing that we are required in our projects. So for working capital, we are not targeting any further increase in the near term. And in future, if we see that we have major projects, then we can go for the more debts. Otherwise, we have ample funds available as of now to execute all these projects.
Okay, thank you. I'll come back in the queue.
Thank you. We'll take our next question from the line of Shaurya Punyani from Arjav Partners. Please go ahead.
Hi, am I audible?
Yes,
Yeah.
please go ahead.
So I just have one question. So what is the capital cycle in days?
Capital cycle.
It is around 100 days, quite similar to what we were having in financial year 25 also. It is around 105 days only. So
Okay.
it is because of the EPC projects which takes time to.
Shaurya?
Hello.
Yes. Does that answer your question?
No, I wanted how much time do we receive the payments from the government?
Uh, No, payment we receive every month from our clients, but when we submit the bill, it takes time to check, and then you go to finance and then approval of the funds. So after sending the bill, it takes around 1 or 45 days more. So some projects like Unitech will take longer time and some are shorter time. It depends on the project to project, but yeah, that is how it is.
Every month.
Every month we receive, billing is done every month.
Okay. Okay. Thank you so much.
Thank you. Before we take the next question, would like to remind participants, to ask a question, please press star and one on your phone. Next question is from the line of Jayesh from HDFC Securities. Please go ahead.
Yeah, thank you so much, and good afternoon. Thanks for the opportunity. Am I audible?
Yes.
Yes, Jayesh, please
Am I
go
audible?
ahead. Yes, please go ahead.
Thank you. Thank you. So, sir, my first question is that what is the current book-to-bill ratio and target, and the target range that the company is comfortable with?
So current book-to-bill ratio is approximately about 2, and we are targeting to have it around 3. Like we are having a order book of 850 crores as of now, and our turnover is around 350-400 crores on yearly basis. So it is currently 2, which is also healthy, but we are targeting to keep it to 3 also. Because when we get the project, it takes 3-4 months at least to start a project.
So 3 is what we are targeting and we are hoping to achieve soon.
Okay. And sir, and what about the target range?
Target is 3.
Target is 3. As of now, it is 2.
Okay.
Yes.
Okay. And sir, what proportion of the order book is fixed price versus the escalation link?
Mostly our projects are with escalation. I mean, one project, the Cricket Station 222 plus GST project is of fixed cost, and that also the steel is supplied by the department, so more or less it is covered by the escalation part. But yeah, other mostly projects are with escalation only.
Okay. And sir, how much of the order inflow in FY26 has come from the repeat customers?
Repeat customers already.
Yeah, all our orders are from repeat customers. We are working in 2-3 departments like NBCC, TCIL, CPWD. These are the routine department, and I mean the main client like colleges and IIT or IIM or NIT, they changes, but the one who's executing the projects are the repeat customer only.
Okay. And are there any large order finalizations expected in the near future or near term?
Near term, around 500 crore project we have bidded and we are expecting to open that in 1 month. So we are expecting some orders out of that, but again, unless their pipeline is open and tender is, we have declared lowest, we can't confirm that. But yeah, we are expecting some of them at least. Like 4 projects we have built, so some projects 1, 2, 3, we are expecting.
Or at least 5 maybe, we can say?
1?
Or 3.
3.
Yeah, sorry, I'm saying that, 3 we can expect. Okay.
Yeah.
And sir, what is the bidding pipeline that is currently under evaluation?
500 crore is the bidding pipeline which is under evaluation, under bidding for next month.
Okay. The sports infrastructure actually has grown meaningfully.
Yeah.
Can say a lot. So is this a strategic focus area or?
It's a strategy focus area because in next 5 to 7 years there's a lot of sports infrastructure that's going to build across the country because of the Commonwealth and or maybe Olympics also comes to India. So again, our focus is to have a niche area in sports infrastructure. So that was the focus, and that's why we took a stadium project. And we are expecting in this year to get at least 1 or 2 more sports projects.
2 to 3 more.
Yeah, one or two more. One or two more.
One or two in entire year as an
Entire year, yeah. Because, I mean, we for getting three, from 2 to 3, we just need 3, 4 projects, not like 10 projects. To book to bill ratio increase from 2 to 3. We just need 3 or 4 more projects.
400, 500 crore projects is.
Okay. And are there any plans to enter new high margin sub-segments within EPIC or sorry, EPC?
There's no specific plan, but yeah, again, we are look out for specific projects with high eligibility criteria and high margin to quote. But there is no specific which we have decided or path to take for the next thing. But again, we are in lookout for some precast project or some another project which has high margin and these things. So we are in lookout, but nothing has been decided or nothing has been chosen as of now.
Okay. And so if we talk about the project delays or cost overruns, means historically, so have there been any kind of project delays during the recent quarter or prior to that as well?
No, project has been delayed, but again, it's mostly part of the department that has been at fault, and there's no project where the penalty has been levied on us because of our delay. And mostly we account for the rainy season delay or the pollution delay or some other delay. We account for that and we expect that to happen. We are already prepared and it's already presumed to build in that this 18 months project will finish in around 24 or 26 months because of the pollution or other things. And plus we have a escalation to cover the overhead part. That also covers the overhead and cost part also.
Okay, so you mean to say that if there are any delays, so those are caused by external factors only, correct?
Yeah.
Okay. And so, what is the current capacity utilization of execution teams?
Currently, our execution team, old execution team is fully utilized. There is no open, but yeah, the hiring is keep on happening and projects keep on finishing. Like one project, NIT Delhi is about to finish in 1 month or 2. So we expect them to shift at another site and another place. So we have some ample people with us which are ready to move and ready for the new site. But again, right now it is full. With bill to book ratio to 2 times, so it is more or less occupied.
Okay. Thank you, sir. And so actually, there are last few questions from my side. That is, can you please quantify the benefits expected from the planned this 142 million machinery investment approximately that has been planned?
Quantify the benefit?
Yeah.
Again, these machinery we used to purchase regularly, and he's going to add to our, which we sometimes we have to get on rent or something, which will now the rental won't be there. So again, that will add to our bottom line EBITDA, but we can't quantify exactly how much will it contribute. But over the time, it will again help us to strengthen us, to speed our work and get on time and get a good margins. But quantifying exactly.
Majorly, we are buying scaffolding shuttering material from this, which we are taking on rentals also. So these are such products which generally does not depreciate a lot over the year, but rental is high. So we are buying these shuttering material for the bigger projects. Generally, we are in the building project, so it is something which can be got a lot and it is never-ending process. So instead of renting, we are looking to have our own shuttering. Although we are every year we were also buying this on a regular interval, but now with the IPO we have got more shuttering.
Okay. Sir, what portion of the receivables is from the government clients, and what comfort that investors can take on collection part?
So most of the receivables are from the government only, and we are doing very limited private projects like Delhi Public School or United, the Delhi Public School have ample funds with them. So we try to bid projects which have funds already available with them for the particular project. So most of the receivables are government only.
And sir, okay, so any particular numbers that you would like to specify or by
Yeah, around 90% is government.
Say Unitech also is Supreme Court Monitor Committee that's been paying us. So we consider it as safe and government only. So in that case, one Haryana quick registration is of private, which has not started, but yeah. So 70% you can say supply figure is government and 30% is private.
If you take Unitech in private.
70-30, correct?
Yeah. If you take Unitech in private and Haryana quick registration in private, it's a
Overall.
no. Yeah.
Overall, if we talk about correct.
Mm-hmm.
And what is the targeted working capital cycle over the medium term?
With the actually we are in the EPC phase one. The EPC cycle gets over. We are expecting to reduce the working capital cycle to 75 days, 80 days at least. Because now, if you see one of the project in Narela is almost completed, and we are expecting that our receivable would come at the handover stage, and it will reduce our working capital cycle. As जैसे जैसे आप EPC projects complete करते जाएंगे तो वो जो amount blocked है EPC में that will come out.
Okay.
So we are targeting to reduce it to 75 days at least.
Okay. Okay, thank you, sir. And the last one from my side, just the last one. So that is, what is the margin differentials between government versus private projects? And as well, how do you see the mix evolving over the next couple of years or 3 to 4 years maybe?
Margins are similar because that's what we have to quote and we have to get. It's not that the private give a better margin or government gives a less margin. You have to quote yourself unless you want to go into low margin. Nobody will force you to go and we don't go it. And we would remain similar to this only. Next to 4-5 years also, we want to keep it at 70-30, more focus on government projects and less on private projects. Because ultimately private projects are market driven and still a risk factor is there. So we want to keep it a better risk and less risk. So 70-30 is what we are targeting and more than that.
Okay, so for like next 4 to 5 years as well, the same will be like more or less.
We are more focused on government projects only.
Okay, then private. Okay. Okay, so that was it from my side. Thank you so much for all the information and all the very best for upcoming interviews. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. As there are no further questions, I now hand the conference back to Mr. Gautam Nagar from Equibridge X Advisors for closing comments. Over to you.
Thank you. On behalf of... Yes, I'm audible?
Yes, please go ahead.
Yes.
Yeah, thank you. On behalf of Globe Civil Projects India Limited and Equibridge X Advisors, I thank everyone for taking the time to join today's earnings call. If you have any queries, you can connect to us at info@equibridgex.com. Thank you once again for joining the conference. Thank you.
Thank you.
Thank you.
On behalf of Equibridge X Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.